Hi, I'm Roy Collin, the host of the podcast. You can find everything about me by scanning the QR code there or going to roycollin.com, and you'll find my 6 podcasts: the Podfather, helping people become podcasters; the Awakening, exposing fraud and corruption but with solutions; the Crypto, all things blockchain technology; meditation podcast; speaking podcast; and the Learn Polish podcast. You can also help the show by actually making a donation, visiting the store, or helping my sponsors. I hope you enjoyed this week's show. Welcome to the Speaking Podcast. You can find all our episodes on speakingpodcast.com. My guest from Texas, USA, is serial entrepreneur, and he's the founder of FinElevate. Please welcome Colin Sanburg.
Yeah, thanks for having me on, Roy.
No problem at all. So I see all the books behind you, which I always like, but you might let the listeners know a little bit more about you.
Yeah, so thanks for the opportunity. And yes, I'm very passionate about my books. I see you are as well. But so I've owned 4 different businesses, been in entrepreneurship my entire career. I started when I was 21 years old. Actually decided I wanted to be an entrepreneur, and then went to a family-owned business. Just found the person closest to me who was in business and said, hey, I'm going to go there for a year, see behind the scenes how this whole thing works in small business, and then I'll go out and do my own thing. And 22 years later, I still own that business. And I think kind of the classic story there of once I was in it, I was in it. But that gave me a love. So the business was a turnaround. It was in really bad shape. That was part of how I ended up getting kind of stuck there and eventually owning the company. But I developed a passion for turning around and working through all the financial problems that business had. And so I just became a very financially focused entrepreneur. And so over many years, as I was able to finally get that business turned around and get it back above water and able to set aside some money to invest, I invested in a couple of other companies, always with that same focus on, I'm going to be the financial seat of the company, and I hired other managers or CEOs to run the companies. And now I'm really excited about, just in the past year, I've started my own, we're profitability consultants. So we're similar to a fractional CFO, except we're not bringing people a, strategic plan on their money and their finances of their business. We're really helping them dive in and do the things that it takes to actually make more profit within the business. And a lot of times that's not a fun thing for the entrepreneur to do, which is why we help do it for them.
Yeah, excellent. So when you were 21, what was that business and what kind of lessons did you learn? Because, you spent most of your career there.
Yeah, so that's it's an airport conveyor company. So we make the baggage claim, like what people claim their luggage off of at the airport when you fly. We make those systems. And originally it kind of did a little bit of everything. We got it very highly focused on the parts business, meaning, existing conveyors, we were selling the parts to help fix them. And so, yeah, that was where I spent the first, 10 to 15 years of my career, was very heavily focused on that. And I would say, I learned a lot of the financial things, but it also taught me, I'm not an engineer. I didn't want to do sales. So I wasn't a product guy. I wasn't a sales guy. I kind of always ran business, like I said, from the financial seat. But it taught me to view business. So it's a manufacturing company, and it kind of taught me to think of business in a very systematic, like the normal flow of business, starting with the sales, through the operations, and then ending up with the finance piece. And it all has to sync together, or else none of it really works.
So you went away and done an MBA, I believe, yeah?
Yes.
So what age were you doing that? Because I see a lot of people, they kind of do their studies and then they go to work. But I think if you're in work and you do studies, you're actually going to really pay attention, as opposed to this is part of what I have to do in life.
Yeah, no, you're absolutely right. So I think if I had gone when I was, say 22 and didn't have that experience and went and got, started my MBA program on kind of a normal fast track, I would have not learned half as much as I did. I was 26. It was from the time I was 26 to 28 that I was doing the MBA. I'd already been in my company for 5 years. I actually, within 1 month, I started that MBA program. I took over as CEO of my first company, and I met my wife, all within 30 days. So it was a very fast whirlwind of time for me. But to your point, every time I went to school, anything that I learned, I immediately was applying in my business. Because in a small business, there's nobody to stop you from doing it right away, right? So that was a really impactful part of the education, was took what I learned from work and questioned it at school, and I took what I learned at school and implemented it back at work.
Like for those that are business owners, is it something that you would encourage them to do? And what exactly did it entail in the course?
Yeah, so the program that I went through was an executive MBA, so it was 1 Friday and 2 Saturdays a month. For about 2 years, 2 school years. And then it also included an overseas trip, went to Prague and Paris. And so it was, for me, I would say it was 50-50. It was part what I wanted to learn and get out of it. And it was part I wanted that experience for myself. And I think us small business owners, we sacrifice so much for the business. Everything is about the business, especially if the business is struggling, which mine was struggling a lot back then. And so doing this program was kind of my dream and my goal. And so, I really did it for me. Now, I will say the learning side, what I tell people is, I was doing small business finance at that time, and I was really passionate about it. But there was something about the big companies, they had figured some things out that we didn't know. And so I was really passionate about figuring out, like, what are the big companies and the medium-sized companies, what have they figured out that us small guys haven't? And if I can learn it, I can figure out how to distill it down and apply it back in my small business.
So you mentioned Prague and Paris. Why did they bring you there? What was that about?
Yeah, so I think
just a piss up or something like.
Well, the people running the program, they like wine, so that was part of it. No, so it was supposed to be to learn about international business. That's one of the challenges for us in the States is, we got this giant continent-sized country. And so you just get this very insulated understanding of business and experience with business. And so, you're not dealing with what happens like in Europe, where international commerce is just kind of the norm. So they were taking us overseas just to basically learn about, how some of these different countries operated and learn about business over there and drink wine.
And cheese, I presume. So.
Oh, absolutely. Yeah. The food, the wine, it was amazing.
So when you kind of get involved with a company then and you're watching the financials, like, have you had situations where, like existing employees are kind of, because when you come into a company, you can kind of see the weak points. And sometimes it's the employees. They might have been great at the start to get to a certain level and they'll never grow about that. Like, what kind of issues have you seen other than financials in a company that you've kind of come into?
Yeah. So to that point, I think, I'll start one earlier for you, is we see a lot of times that the owner of the business has not learned and evolved the financial side of the business. When you're starting a business the first time, it's easy to just live out of your checking account and say, like, we either have money or we don't. That means things are either okay or they're not. And so you see business owners sometimes, they don't evolve beyond that. And let's say they scale their business. Now they're doing $1 million, $2 million in revenue. That old method doesn't really work. You start to see it fall apart. And a lot of times the owners are too nervous to admit that they don't really know how to do it better. And then, of course, their team is going to be a reflection of that as well, right? They're probably not going to be hiring sophisticated people. So I definitely see a challenge with employees not being, sophisticated, not really understanding the financial side of business. But if the owner doesn't, and they're not working on it, then we have a real challenge, because we've got to address that before anybody in the organization can grow.
A lot of companies, it's cash flow is the issue. It's not like getting the customers and everything. And sometimes it happens when they expand, and depending on the country, but some of them, like, they have like 30 days before you get paid. Others, it can be 3 months or even more, and that can kill a company. But what I see a lot doing as well is they use the credit cards, and they're just kind of maxing them out, and they're using that, and then they get to a level where, so like, what kind of advice would you give to small business owners that are kind of going through that?
Yeah, that's a fantastic question. And you're absolutely right. There are challenges with certain business models in terms of their cash flow. So to your point, if you're doing like my first business in the airport space, that business has a really rough cash flow cycle, because sometimes you're doing these big projects and the government entity says, like, hey, hurry up, do the design, start building the product, come put it at the airport. We'll pay you in 60 days or whatever, right? I mean, 60 days, 90 days. And so it's a very cash intensive business to do well with. And so sometimes it's just the nature of the industry. But what I would say is the very first thing is make sure you're profitable. So a lot of times a business owner who is not good with their numbers, they are not, really making sure that on a month-to-month basis, a quarter-by-quarter basis, that they are profitable. And so what happens is it's a different animal to finance cash flow versus financing losses, right? And so what I'm always passionate about telling people is I don't love financing cash flow. I don't love that at all. I don't recommend it as a long-term strategy, but there are short-term examples where it has to be done. But let's make sure we're profitable. In other words, let's make sure that by the time we get to the end of the financing and the money comes back home, that we actually get some to keep. And it's not just so that we can be rich as entrepreneurs, it's so that we actually have a stable, healthy business. And I think that's a little bit where, people can get off in that is you get so caught up in just thinking about the cash side, you're not focusing on the profit side. And so you're kind of building a bigger and bigger house of cards.
And like sometimes with 30 to 90 days, and I mean if it's government, they'll tell you 90 days, and they'll probably 6 months later you're still knocking on their door, which is sad because they can pay immediately.
Exactly.
Some people, they use kind of like invoice discounting, like a financing company that take a certain percentage for. Is that a dangerous place to get into, or what's your thoughts on that? And I don't even know how much they charge because I've never personally used the service, but I've heard about it.
Yeah, it's definitely a dangerous place to play in my mind. It's like living off credit cards. It's really not a lot different in the sense of it's a big red flag that something's wrong. So, and what I would say is that a profitable business that is growing at an appropriate pace. So the other thing is your ability to grow is really, in my mind, is predicated on two things. Number one, you have to be profitable. Number two, you have to have a reasonable amount of cash flow. And it's only to the extent that you can be profitable and get your money to return quickly, that's what determines how fast you can afford to grow. So to your point, a lot of people just think like, I've got to grow as fast as I possibly can. As fast as I can get customers, that's how fast I have to grow. The reality though is there's companies that grow themselves out of business. They run out of cash. And the longer it takes your customers to pay you, the more dangerous that approach is. The less profitable you are, the more dangerous that approach is. So to your point, if we get into a scenario where we're have to doing like factoring is what it's called a lot of times, which is I'm selling my receivable. The minute I do the job, I'm selling it to a company, it takes a big chunk of it. And then they give me all that cash and then they help me collect it. The problem with that is it's a very expensive way to borrow. And the only reason why a bank wouldn't be a better option is if you don't have profit or you have poor cash flow, right? So it's like if you have those red flags, you fall into the arms of the worst option out there, which is credit cards or factoring. And if you have those other two elements, you can go to a bank, you can find a more stable form of supplementing your cash flow that's actually sustainable, that you can actually continue to use and not get harmed by it.
And a lot of depending on the service that you're using and everything, but a lot of them, like the likes of Walmart and big companies like that, they pay very slow. And is there the option that you say you pay within 30 days and you've X discount or whatever? Obviously, building it in this, you're still profitable. Do people do that? And is that advisable? Because sometimes when you say that, look, if you're going to be 30 days plus the 30 days, it's going to be more expensive to you.
Yep.
Do people do that? And what is there what's your thoughts on that one?
Are you saying as far as like put a discount for early payment?
Exactly. Yeah. But I mean, you're still profitable, obviously.
Yeah. So exactly. It comes back to the same thing, right? Any type of discount, whether it's going to, whether I'm charging interest, I'm paying interest to a bank, whether I'm paying for factoring, whether I'm paying, basically my customer to pay me quicker. Any version of that depends heavily on, I have to be profitable and I have to be able to say that lever I'm pulling. So in other words, that change in my cash flow puts me well into the comfort zone. I cannot be, and what happens is people are like, oh my gosh, if I don't get paid for 90 days, I'm dead. I'll offer the customer a big discount to pay me customer claims they're going to pay me in 30 days now, but really they pay me in 45, 50, 55 days. And then they finally pay me, but I've given them the discount like they're going to pay me in 30. And I'm like borderline not able to pay my payroll. And I finally get the payment. Well, that kind of feels like you're just playing, a gamble that eventually, if you lose that gamble and they don't pay you on time and you miss payroll, now you're in a really big world of hurt. So to me, you cannot afford to long-term use those expensive methods to finance your business. It's just a sign there's something wrong. You need to address the core problem and not put Band-Aids on that broken arm over and over again, hoping that it'll get better.
I know you talk about kind of like mentorship, being in a mentor group and kind of even, I suppose, being connected with entrepreneurs as well. So you might touch on that for the small business owners.
Yeah, no, that's great. So to me, I'm a big fan of mastermind groups. So for anybody who's not familiar, most people nowadays are. I started doing it, 20 years ago, and I'd never heard of the concept. Now I was, a kid and didn't know much about anything. But, the concept is get yourself surrounded by people who have similar goals to you. Some of them are going to be ahead of you in the journey. Some of them are going to be behind you in the journey. That's okay. Both of those are important. Some of those are going to feel like, a kindred spirit. They're going to be right where you are, some of the same, gaps in knowledge. Get yourself around, and it could be as few as 2 or 3 people, or as many as you can possibly find. But the more you spend your time around people who are in these similar challenges, number one, you're going to find people who have a shortcut, that you haven't figured out yet. That's invaluable for somebody to say, oh my gosh, I've been right there. Here's how we deal with that. Here's what I did. Here's what worked. Here's what didn't work. Here's what I tried. Here's, I revised it 3 times and the 3rd version worked. Why don't you start there and see how it goes? And so that's incredibly valuable in your journey. And especially feeling, sometimes as an entrepreneur, you can feel like it's you against the world. You can feel very lonely. So feel like you have people who are around you, who are not trying to get their hand in your pocket to take your money. They really just want good things for you. I mean, that is one of the best things in the world. And I tell people that all the time. I don't care whether you are in high school and you're trying to, get to the college you want to go to. Surround yourself with other people who are on that same journey. Surround yourself with other people that who are trying to get to their dream college, and what are they going to do to get there? And so it doesn't matter what your goals are, surround yourself with those like minds, and it just boosts you up. You feel like you have to be accountable to them, and you have to be the example for them. And that immediately boosts up the way you behave.
And like in a mentor group, like once you're not competing in the same kind of area, like it could be is it better to have people in the same sector or totally different sectors?
Yeah, I think it's highly dependent on the type of sector. I would say that, and I also would say that it's not a one and done is not how I approach mastermind groups or mentor groups. In other words, I have one I'm going to go to on Thursday of this week. I have another one that I'll do Friday of this week, and they're wildly different. They have different goals. They have different styles. I kind of have a different connection with the people who are in them. So I don't think you have one and then you're done. So there may be an industry group where there's certain things appropriate in an industry related group, and you may be able to share for example, if you've got a local business and someone in a town 1,000 miles away from you has the same experience because they're in a local business, that's fantastic for you to connect on. But sometimes there's challenges within the industry that, you can address by having a group that has nobody in the same industries. So I would just say there's not one answer, but, have 2 or 3 of them. That's worked really, really well for me.
You have like a kind of structure of how you do it, because I've been involved in a few of them. And what I find is sometimes they get to the stage where you become friends and then it becomes like a chit chat. You're kind of still having a bit of business, but it's lost what it was originally. Have you experienced that? And what's the best way to kind of make that not happen?
Yeah, so I think that's a great question. So I would also say that every group I've been in kind of takes on a bit of a life of its own. It takes on a little bit of its own format. And some of them, if you don't have a heavy structure, just like any organization, any group, whether it's your company, whether it's your family, if you don't have a strong structure, it'll just kind of morph into whatever it is. And so if you don't want that, then implement a structure. And so the one I'm going to go to on Thursday, I started it 15 years ago. It has a really simple but standard format that we follow, which is, we start out with basically lunch. We kind of meet for an early lunch. We have the chit chat, hour or so of lunch. Everybody's eating. We're catching up, what's going on in the world. Then we switch into updates for each company. And so this is a group that's 10 or less people. You can't do this with 25 people, but we go to a quick update for everyone's business. That way, every month we know what's happening. We know anything big, anything, that's really eating at the owner of the business. And then after we're done with that update, which takes another about hour and a half, we then focus on one of our members' businesses for the rest of the afternoon. And so that's 2.5 hours of a presentation, question and answer, and then advice. And so at least once a year, you're getting that in-depth mastermind focus, but every month you're keeping up with what's happening with everyone. And so we found that format, it takes about a half a day, but I look forward to it every month. There's a tremendous amount. I mean, I've gone home and literally had champagne in celebration of one of my other members' victory in his business. He finally sold his business, and I went home and told my wife, I said, hey, it's a little bit weird, but we're drinking champagne tonight. Actually, his name's Roy. So we're drinking champagne for Roy, believe it or not you, but maybe next time.
Oh, no, that's fine. I love that structure. And the fact that you do it monthly, because I think sometimes people, like I remember some people would be in our our groups, and they say, oh, I've got another one. And they kind of overdo it as well. Like what you're saying, once a month. I think that's brilliant because you're doing it properly. It's not just an hour kind of chat and you're trying to rush it in and just there's somebody that's got a pain point and they're doing it. But you're and then once a year you're covered. And obviously if someone's doing a presentation, you're taking notes as well. So even though you're there to help the person, you're going, oh, I never even thought of that.
Oh, it's amazing. That's one of the things you'll find if you're new to that process, is that you'll be listening to somebody's problem and it'll immediately trigger you on what you've been missing. It's like this obvious answer to a challenge that you had in the back of your mind. That'll happen. Sometimes a really weird one to me, and you'll also hear advice, from another guy in the group to another person. You'll hear their advice and go, I need that advice. The really weird one is sometimes you'll literally be talking, giving advice to someone and realize I need to listen to this advice. I'm giving advice as I'm speaking. I realize, wait a minute, I need to hear this too. And so, yeah, it's a really, it's a really powerful experience. And the other thing I'll say is when you're getting the advice, I always say the advice comes in thirds. 1/3 of it, you're going to immediately agree with. 1/3 of it, you're going to be like, nope, that's not right. They're missing a big point. That's off base, but I appreciate them offering it, but I don't agree with it. And 1/3, you're just going to scratch your head and go I don't know if that's garbage or brilliant, but I'm going to think about it. And so that's really what the process is intended. It kind of helps you solidify your beliefs. It helps you, challenge your beliefs, and it helps you get you thinking in ways you didn't think of before.
And with a business owner, exit strategies, because I think you should kind of think of this when you form the company. You either decide this is a mission to help mankind and it's going to be long term and I want to pass it on, or I want to get out of this in 7 years and make as much a return as possible. But what kind of advice would you give to people that are kind of looking at exit strategies?
Yeah, I mean, I think you're absolutely right, is begin with that end in mind, right? I think that's true. Anytime I'm meeting an entrepreneur, one of the very first things I want to know, it's a little invasive, but one of the first things I want to know is what are those long-term goals? Whether you're joining a group or working with my company, whatever that entrepreneur is, I need to understand those goals because I love entrepreneurship. I love the camaraderie of working with other entrepreneurs. We have to know what the goal is. So to your point, if the goal is to change mankind, we're going to approach it very differently than if the goal is, hey, I want 5 years and I want an exit and I want it to either be for as much money as possible, or some people say, hey, I want to own the business and not have to work there. So depending on what that goal is, it's going to really guide everything about it. I don't think there's a wrong answer. I think the whole point of entrepreneurship and owning a business is that you get to decide for yourself. It's it's a choose your own adventure. You get to figure this out how you want to approach it. No one else should tell you that answer. But you also need to be confident in the answer and be open about it so that the people around you can help work toward it.
And what's the best way of kind of deciding the value on the exit strategy? Because sometimes people are like, it's cash, the turnover, and others, it's like the profit of the year. And then there's so many different standards and industries and everything. Like, what's the best way to kind of navigate that? Because sometimes you have people that just say, look, let's get what the average is for this, and we kind of agree on it, but they can never find, because one will go away and find something that's 3 times the price of the other one.
Yeah. So, for me, if I'm buying a business, I'm interested in the profit, right? The revenue is, I love the old saying, revenue's vanity, profit is sanity, and cash is king, if you've heard that. And so, again, that's where the best case scenario is I'm looking at it from the cash flow. That's my best case scenario. But a really common middle ground is I'm looking at the profit of the business. For me personally, the revenue is not irrelevant, but I'm certainly not willing to buy. That feels a little bit more like I'm trying to buy lottery tickets and hope that I can turn profit instead of profit itself. And so usually, for what I would recommend is look at the profitability of the business. There's kind of standards for different industries for, what the business would sell for. And so that's really the way I like to look at it.
So your own company, FinElevate, what exactly are you doing?
Yeah, so FinElevate, again, from running the business through the financial lens from the beginning of my career, it's just what I naturally gravitated toward, the numbers. And that's always been my role. And so it's really helping companies with a service that can deliver kind of a similar approach to what I've done. So the way we look at it is I start out with everyone's goal. We've built a proprietary dashboard. So we basically build a dashboard on top of people's accounting software that tells them, it's kind of like a report card for your finances. Because I find one of the challenges for entrepreneurs, they get into the profit and loss statement. They get into, and they're focused on all the big numbers, right? There's turnover, revenue, depending on what you're calling it. We've got, what the bottom line is. There's a bunch of big numbers, little numbers in between. Everybody's bouncing around and gets lost, right? So I turn it into a simple report card. I'm going to tell you, 1 through 100 where you're grading at. And we're going to set a goal for where you want to get to. And then really, once I know where you're at and where you want to get to, the next step is pretty obvious. So I've got a playbook of 450 plays that we can possibly do. Everything under the sun, from every book I've found, from every experience I've had, everything to be able to increase the profitability of your business. And we're going to go after it. We're just going to get one play after another, line them up and get to work on it. And so we call ourselves profitability consultants. We have kind of a hands-on version that we do that's a little more intensive. And then we have some clients we work with where we're just guiding their journey and giving them plays and coaching them along the way, but they really want to get in and do it themselves. So we work with both types.
I mean, I've got with all my podcasts, for some reason, half my audience is in America, but are you just dealing with America or is it international?
Yeah, what we do applies anywhere. So I'll be really candid. Our clients right now are in the States, but again, part of what I love about this, we started out down more of an accounting kind of bookkeeping path, which is a lot more industry specific and business specific and, region specific in terms of like the States versus how accounting works internationally. I'm passionate about helping people make money. That's what I love to do. Those principles are timeless. Those principles are geographic independent, right? They really are the same concepts no matter where you are in the world, what kind of business you have. Is we've got to get your pricing up to a premium. We've got to get your costs contained. We've got to get you really understanding labor or any of the other major costs that you have and how those things are a profit center. In other words, how they're making you more money, not just costing you money. And so once we get those levers kind of dialed in and we just keep revising and improving and revising and improving, and over time, it's amazing how big of a transformation that you can have.
Like, you're currently involved with a few of the companies still. Yeah, it's not that they've got. So how do you navigate your time? Because I'm a serial entrepreneur as well. I always have a few different companies going and a few different things. I'm just curious, how do you navigate your time? And following up to that as well, because like we were talking about the masterminds, do you bring everything to the table or do you say, I'm putting on the FinElevate hat? What way do you do it?
Yeah, that's a great question. So to your point, as a serial entrepreneur, I think we all learn, just like in any type of entrepreneurship, if you're not constantly learning and improving and tweaking your systems, you're not doing it right. So I'll tell you my methods today. Number one is, if I'm not day-to-day in a business, it has to have a CEO. That's one of my big approaches. So I would call myself more as a board member in those companies, my other companies outside of FinElevate. In FinElevate, I am the CEO today. So that's where the vast majority of my time is going currently. And I do get to play kind of on both sides of that, because within FinElevate, we have clients that are all my other companies. So those are we can take care of through FinElevate, and I can kind of help work on them and make sure that they're being taken care of. But, I'm more in working with the CEOs, advising them, kind of as a true board member, helping set strategy, advising them, overseeing the results, and giving feedback. So it is not this perfect, like I put this in a box and I set it over here and I ignore it for, a certain period of time. My days are sometimes a little bit mixed, but I would say that's the biggest way I'm approaching it right now. My biggest two secrets is, have a CEO or strong leader in every company. And even with FinElevate, the very first thing I did was hire a director of operations who would be in charge of the day-to-day. That's not what, I don't have the capacity to do that or do that well. It's not really my strong suit. And so, that's how we approach it.
Very good. And like with me, I'm a pen and paper guy, and I kind of make my list daily. And then I find that, okay, put a star next to the things that should be done rather than being a busy fool. Just curious how you navigate your days. Do you use software, or what's your way of actually getting everything done?
Yeah, so I'm a combo guy. So I'm a big calendar person. Calendar is key. I also like to plan out my week on a pen and paper, just like you said. I mean, I'm a big note taker. If this were any other type of meeting, you'd see my head down a lot because I'd be taking notes. But I'm a big note taker. I'm a big pen and paper guy. I like to plan out my week. And to your point, I kind of review my to-do list, my calendar, my email. I kind of do a big once over of everything once a week and make sure I have my big priorities. And it's really two lists. It's like, hey, these are the priorities and this is all the other stuff. And if I get the priorities done and nothing on the other list, who cares? That's a great week. And vice versa. If I leave stuff off and get stuff on the other list done, that's not considered a win. But the calendar, I'll say what I love to do there is I have color coding. So my calendar, I've got, whether it's a sales activity or a personal activity or kind of just administrative, kind of stuff, whether it's financial, I have different colors for those things. It helps me to, at a glance, I look at my calendar in a weekly view at all times, and it helps me just look at it and say, how am I allocating my time? I think of time, and I think all the successful types do. You look at time as kind of it's almost like asset allocation, like you would an investment, as we're investing that time. So I want to see what it's going to. Is it going to sales and marketing? Is it going to, and what I don't want to see is too much of this like administrative, which is my red color. I don't want to see red, right? Red's bad.
I do the same. Actually, I put colors in my calendar. Yeah, it's like you just look through it, and I think,
it's life changing. And then I'll take it one step further. So there's a great book called Buy Back Your Time by Dan Martell. And so anybody who hasn't read that, if you're an entrepreneur, I'd highly recommend it. One of the things Dan Martell talked about was putting a $1, $2, $3, or $4 sign on every type of activity. And so think of it like if you're looking at a menu of a restaurant, is it $1, $2, $3, or $4 sign in terms of the price, right? This is in terms of the value of your time. And so what I did was I assigned colors, have a $1, $2, $3, or $4 sign to each of those colors. And so I know, am I in a $3 sign or a $4 sign, just looking at the colors? That's been tremendously helpful to me. I'm doing things like, staying fit, trying to work on my health. That's a $4 sign activity. It never feels like a $4 sign that day. But if I zoom out and I look over a 10-year period and I say, man, I worked out at least 3 times every single week for 10 years, that's a $4 sign, because I'm trying to, focus on being not just live long, but live long in a healthy life, right? So looking at it that way kind of changes your perspective a little bit on how you allocate that time.
I think that's a very important point that you just said, because I make sure I'm the same. I try to at least 3 times a week. And like, there's a few things to that. One, you're getting rid of the toxins. You're more productive. You're more focused. And as you might think, I don't have time for this. And I hate when if I say that, it means I have to have time for that, because it's like, no, I won't get this done. And it's like, the fact is, you probably get twice as much done when you're actually kind of consistent with going to the gym or whatever training you're doing, playing squash, whatever it be.
Yeah, no, I agree 100%. And like you said, I think I love it. I mean, I subscribe 100% to what you just said. When I tell myself like I don't have time, that's a proof I have to do it, right? That to me is like, wait a minute, okay, hold on. I just started trying to cross that line, because I think part of it, like you said, not only am I more productive outside of that, but it builds another form of discipline, right? And discipline in one area, applied one area, you can call upon somewhere else where maybe you haven't developed it yet. And so, yeah, if I'm working out better, I'm eating better. It just works that way, right? I'm more able to go to bed on time, get up on time, be productive throughout my day. I've got more of a sense of urgency.
Absolutely. And just finally, because you mentioned one of the books, but I love seeing a lot of books. It means you're an avid reader. Is there any other ones that you would encourage the small business owner that they should read?
Yeah, so I'm a huge fan of anything by Keith Cunningham or Greg Crabtree. So you can just look up those authors, anything they've written. Those are kind of more financial business owner finance books. But I'll tell you, one that I'm really passionate about is The Hard Thing About Hard Things. And it's by a guy named Ben Horowitz. And that book is, most books that you buy. So Ben Horowitz is one of the most successful investors ever. He's part of Andreessen Horowitz, which is one of the the early investor in Facebook, and on, right? They're just big time Silicon Valley venture capitalists, ultra successful. But Ben Horowitz came up through being a CEO, and Mark Andreessen was actually kind of the investor outsider who hired Ben Horowitz, and so that's how they became partners in this venture capital firm. But Ben Horowitz in the book, he's not writing the book to sell anything. The guy's a billionaire. He's not writing the book to sell a plan or teach you about a new way to look at things. It is a raw look at what being an entrepreneur or a business owner or a CEO is really like. And so he just basically walks you through, man, sometimes plan A sucks, plan B sucks, and plan C sucks. What are we going to do? And I love that about the book, because I think sometimes, people who are trying to sell you this lifestyle that you're going to get to if you follow their plan, they gloss over the harsh realities of what it's like. And, I think for us entrepreneurs and business leaders, sometimes the healthiest thing is to see somebody else who says, yeah, sometimes it sucks. You just keep putting one foot in front of the other and keep moving.
Listen, thoroughly enjoyed the conversation, Colin. You might let people know where they can find you.
Yeah, absolutely. So I'm on LinkedIn quite a bit, Colin Sanburg. I'm sure you'll have my LinkedIn in the show notes. And then just my website, like I said, FinElevate.com. We're helping companies make more profit. And, that's something I'm really passionate about. Love working with and meeting entrepreneurs. So I always say, hey, whether you're, looking to work with us or not, let's connect. I talked about how many mastermind groups I'm in. I love connecting with other entrepreneurs, whether it's making another connection for them or just getting to know them. That's something I'm big time passionate about.
Excellent. So thank you very much. And I'll make sure I'll put in the audio and the video.
Thanks for having me on.
No problem. So that's all for the Speaking Podcast. You'll find other episodes on speakingpodcast.com. Until next week, take care. So I hope you enjoyed this week's episode. As mentioned at the start, you can find my 6 podcasts on roycollin.com or scan the QR code if you're looking to start a podcast or do a podcasting tour, help with that. Also, if you're looking for a virtual assistant, we also have that service. And you can help the show by visiting the store, supporting our sponsors, or making a donation. Until next week, take care.